This episode of Market Talk is brought to you by Growmark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And joining us now here on Market Talk, pleased to have with us Jim Roemer from Best Weather Inc. He is with us. And Jim, it's great to have you on the show, sir. How are you today?
Thanks. Looking forward to it.
Well, great to have you on, Jim, and let's dive in. You have a lot of knowledge about weather and markets, and looking here recently at the market trade, we have a lot of factors in front of us. We have the looming recession. We have all the weather, going on, and this is typically a weather market time of year. You throw in, all the money liquidating out of grains and oil seeds here the last couple of weeks, and trying to kind of get back some strength here at the end of this week. It's just been a very active, very volatile market trade here lately. So talk to me a little bit first, just your overall view of this grain market right now, and as we enter the mid part of July, what kind of stands out to you, Jim?
Yeah, well, basically, we have seen, of course, a stronger dollar and rising interest rates, which have pressured commodities, but also the fact that the corn and soybean crops are relatively really good condition right now for most of the Midwest has created kind of a sell-off in grains. We saw a rebound on Thursday. Because of some hot, dry weather expected in the western Corn Belt in mid-July, readings up over 100 degrees in parts of western Iowa and Nebraska next week. So a very volatile market, trying to kind of weigh the factors between the recessionary fears and a higher dollar and the potential for some western Corn Belt heat and dryness as we go into mid to late summer.
Now, we think about the weather and that hot and dry forecast, and it feels like here lately, we've had some of these good rains, and it maybe feels like the weather's turned a bit bearish up until now, this new forecast. As you look out here long-term through July, this key corn pollination time frame, as you alluded to, that hotter, drier forecast maybe out there, do you see weather becoming maybe a bullish factor again in the markets?
Well, I certainly think that this short-covering rally mid to late week here in beans and corn was due to a high-pressure dome that's going to be centered over the Midwest, particularly over Nebraska, possibly the western Corn Belt for a week or so. Helped to rally the market back here a little bit, but you have to remember that we're at relatively high prices historically in grains, and only a small portion of the corn and soybean crop will probably be hurt this summer. And with a weakening La Nina later on this year, that probably bodes well for South American grain production in 2023. So at these relatively high prices, pretty good opportunities for farmers to be hedging some of their production. We don't see these prices very often, obviously. We're going to just see a very, very volatile grain market this summer. And then I think longer term, probably bearish into 2023.
Well, and also, we throw on the world issues as well, and there's, still talk out there about global food shortages, et cetera, and a lot of folks have their eyes on the U.S. here this year to produce a good crop, whether we're talking corn, soybeans, wheat, you name it. As you look globally, what are some of the factors that stand out to you in the markets here globally? Has anything really changed? Obviously, Russia, Ukraine, that situation, it feels like that's maybe almost taken a back seat to some of the other issues that are affecting the market right now.
Well, I was lucky enough, actually, about 6 weeks ago in my Weather Wealth newsletter that I provide to farmers all over the world to give them long-range forecasts and hedging and trading strategies to actually recommend selling wheat over $12 to $13. I thought a lot of that inflationary concern and the Ukraine-Russian war was built into prices, considering we have a relatively good U.S. harvest coming on right now, improving weather in Australia, Canada, which had a major drought and a huge move up in oats and spring wheat last year, seeing a rebound in production during this third year of La Nina. That's kind of relatively bearish wheat. Wheat broke $4, but now we're seeing a little bit of a rally back because of droughts in Europe. So I'm always watching weather in 4 to 6 different countries, following the dollar, following interest rates. I think we're probably due for some kind of rally here on an oversold situation in wheat. But longer term, I think we're going to see a rebound in production in wheat and in grains, corn and soybeans, particularly in 2023.
And we don't want to forget as well, next week we have a July World Agricultural Supply and Demand Estimates report out from USDA. Not expected to see many big changes, though, in that report. It sounds like, for the most part, we'll be incorporating that June 30th acreage data. As you maybe look at that report, Jim, do you anticipate any major moves that could sway the markets one way or another next week?
I think historically in July, we don't see the USDA making a lot of big changes in supply-demand estimates. I mean, typically, we already know what the South American crop is. That's been looked at for the last 3 to 5 months. So it's really going to depend on July and August weather, and then come the August to September reports, much more of an indication of how the recessionary fears are affecting supply and demand, and certainly how our crops in the United States and the rest of the world are faring. We'll get a much more accurate readings by the USDA later in the summer and the fall.
Now, we talked the U.S. dollar. You mentioned that. I mean, 19-year highs here this week, again, up around that 107 mark. We talk about all the inflation worries, the Fed. Everyone is watching closely to see what they do. Will they have another basis point increase here this month of July? It's widely expected. We talk as well about rumors and talk of stimulus in China as well. So we look at the global economies. One has to wonder, the recessionary fears, could that burst our commodity bubble even more here as we move through into the back half of the year, Jim?
I'm not an economist from that respect. I mean, obviously, we've seen a 10-20% break, everything from gold to copper to grains, partly certainly on the stronger dollar, and recessionary fears. If you go back and look at history, all through the 80s and 90s, 4 or 5% interest rate right now is relatively low. So even though we're seeing a little bit of a blip up in interest rates, a couple percent or so here over the last few months and maybe more in the future, historically, rates are pretty low. So these recessionary fears could be more of a psychological projection by people, because the stock market's been in a tear, obviously, since the crash of 2007 and 8. We'll have to see what happens. It's very possible that this is more psychology than anything else, and we don't go into a global recession like many people fear. The stronger dollar, obviously has hurt crude oil prices as well as gold. I advised clients months ago, though it's not weather, to not be long gold as an inflationary hedge, because a stronger dollar and rising interest rates usually bearish gold longer term.
You mentioned crude oil, and we've seen crude come back down under $100 a barrel here today. It's kind of hovering right around that mark. We know that crude oil, gas prices, diesel prices, that's affecting farmers' bottom lines, as well as just the general consumer here in the U.S. You look at this crude oil market, what stands out to you there? Has anything changed? What should we be watching out for here in the month of July?
Well, obviously the Russian invasion of Ukraine was a big impetus in this bull move. And what OPEC does, obviously, is really anybody's guess right now. There's a lot of manipulation that goes on in the energy markets, it seems, from foreign countries. So, technically the crude oil market looks very, very toppy. Hopefully, if we're stay down in the 80s or 90s in crude oil versus 130 there, where it was a couple months ago, that could soften, gasoline and heating oil prices maybe anywhere from 8 to 15%. That would be good news for the economy. If that was to happen, then perhaps we want to go into a recession like many people fear.
Well, Jim, fantastic stuff. It has been great to chat with you today. Before we run out of time, I want you to talk a little bit about Best Weather Inc. and where folks can learn more information about all the great analysis that you provide, Jim.
Yeah, thanks so much. I lived in Des Moines, Iowa, worked for a company called Freezing Endless Weather for 10, 15 years back in the 80s and early 90s, got my agricultural experience and meeting hundreds of farmers and advising them all over the world. And really, just in the last couple of years, I started 2 investment newsletters. One's called Climate Intelligence, gives long-range forecasts using teleconnections, sea ice, La Nina, things like that. Hedging strategies, very inexpensive. That's a monthly newsletter on my website. And then there's Weather Wealth. I have grain farmers, natural gas traders, coffee producers all over the world. That's a twice weekly service. Really gives a heads up on weather forecasts and how it affects the psychology of trading in the markets. There's so much information out there, but there's really a lot of good information. Sometimes you get lost in the shuffle with all these different services, all these, NOAA and AccuWeather, all these different firms. I try to consolidate all this, give farmers a heads up what to look for with regards to both short and longer range weather and how to hedge and take advantage of the futures market, given my experience for the last 35 years.
Well, we appreciate a little bit of your time here today. Again, you can learn more online, bestweatherinc.com. With that, Jim Roemer, appreciate you joining us on Market Talk, sir. Have a great weekend.
Yeah, great. Hope to do it again sometime. Thank you.